We're very, very appreciative that you're here. I've already mentioned to the audience, which is primarily wealth advisors, some multifamily offices, and some high net worth individuals. I've already mentioned that we are investors in your fund. We couldn't be more happy as LPs. And on behalf of our own LPs, you've done a great job in getting great opportunities in the space. And obviously, given your Fidelity heritage, you started in this space early, helped launch Fidelity to be a leader in the space. And for the last few years, you've been Castle Island. So what I think we should probably do is just ask you to introduce yourselves and tell us a little bit about why and how you got into the space. And then we have some questions around your investment strategies as well.
That sounds great. Well, happy to kick it off. Matthew, thank you for your continued partnership. We really love working with you guys. The background on Castle Island is that we got started, originally we were investors at Fidelity, as you mentioned, Matthew. So I guess it was November of 2014, at Fidelity, we undertook a scenario planning exercise to look at disruptive technologies that could potentially impact the core business of Fidelity over a 10-year time horizon. And Bitcoin was on that list of interesting things. And so we were looking at it originally through the lens of, could this be a technology that brings security settlement peer-to-peer? It was not digital gold that initially got us interested. And so we spent about 2 years in R&D mode, tinkering with things, building payment wallets, launching a Bitcoin mining operation, really just trying to learn as much as we could about the technology. Obviously, a lot changed over a couple of years. Ethereum launched. There started to become use cases beyond just Bitcoin in this ecosystem. And so we launched a fund under Fidelity's umbrella initially under a different name in 2016, which is where Nick comes into the picture. And we were managing that together for a couple of years at Fidelity, and then launched to start Castle Island in 2018. And we can talk a little bit more about what we do, but that was the origin story. I'll pass it over to you, Nick.
Yeah, thanks, Matt, and thanks, Matthew, for having us. That's right. I joined Matt at Fidelity in 2017, and the mandate was to invest in both tokens and equities in the blockchain space, and learn what it was like to operationalize a crypto strategy. And it's obviously very different to today. You didn't have Fireblocks or anything like that at the time, and then we saw an opportunity in 2018 to create a dedicated fund focused mainly on the equity side, and mainly on the financial infrastructure side within the blockchain space. We thought this asset class would institutionalize and, significantly grow in adoption over the coming decade. And we thought there were some really underdeployed sectors. And so that was the premise of our first fund. And yeah, happy to obviously dive in more into our focus areas, but the strategy has been basically unchanged ever since.
So that's fantastic. And that's interesting. Strategy unchanged, but investment focus areas evolving over time. And of course, that's the focus for today. So maybe this is, we should go straight into that. What are your top investment focus areas, and why do you believe in each of them?
Nick, why don't you go first on our themes?
Yeah, so it's kind of interesting as a VC. You don't want to be too prescriptive. You kind of want to be open-minded, and arguably in the early days we were maybe too narrow in our focus. I personally was very focused on Bitcoin, and it was hard to find good venture backable companies in Bitcoin early on. Obviously, it's a fairly rigid blockchain, and a lot of the innovative stuff is happening on the new smart contract blockchains like Ethereum. And so over time, we grew to be more open-minded, I would say, but we do have some distinct themes that we're very focused on at the moment. The first one for us, it's something we've been focused on for a long time, is the stablecoin sector. I think all the metrics point to stablecoins being a true breakout success and the first true killer app of public blockchains beyond just the major assets to store value. If you look at the numbers, 220 billion of float for the stable coins, over 10 trillion of settled transactions a year using stable coins, over 30 million monthly active addresses using stable coins. And we see these disrupting, global correspondent banking. Ultimately, we believe and we see in our portfolio that it's far more efficient to build a global fintech on a stablecoin rails as opposed to trying to build it on legacy banking infrastructure. We think that's a fundamental change to the nature of the financial system. It's been built in parallel over the last 5 or 6 years, and we think we're at an inflection point right now. So within that theme, we look at the issuers. That's actually a very challenging market, very hard to break into, we think. Infrastructure, so whether it's a payment service provider, B2B payment tools for enterprise or even consumer to make stablecoin transfers, and then end user consumer fintech applications that are built on stablecoins. So that's a very active sector for us. We've been on it for a few years, but our conviction has really only increased. So that's the first one. Matt, I'll let you dive into the next couple.
Sure. Yeah. The second one is really financial market infrastructure. So we've always had this thesis that at least in the US market, you'd see this convergence of traditional financial services and public blockchains. That was stymied for a few years with Operation Choke Point and the inability for banks and broker dealers to play in this market. But if you have the view that banks are going to want to touch stable coins and Bitcoin and Ethereum and other blockchain assets, there's just a lot of infrastructure that doesn't exist. This is something we struggled with pretty tremendously at Fidelity when we were launching the custody product over there. And so you would have basic challenges around, okay, what is the price of Bitcoin that goes on the customer statement? There weren't any reference rates back in 2017, for instance. And so we think there's big opportunities with compliance software businesses, trade execution platforms, prime brokerage businesses. So we've been very active at that intersection of financial services. The third one is cybersecurity. So unfortunately, this is a category where the industry has just shot itself in the foot time and time again. And there are very basic things that exist in Web 2.0 world that don't yet exist in Web 3 in blockchain space. So we've been increasingly active in the cyberspace. Think that there's opportunity to build large standalone public companies in that cybersecurity space, specifically with the focus on blockchains. So expect we'll be more active there. And then Nick, I'll let you wrap it up on the fourth area of focus.
Yeah, lastly, we still do think there's meaningful opportunity for next gen blockchain protocols. We think there's parts of the design space that are still underexplored. And so, we're still looking for the next L1 or the next L2. We think the balance of performance can still be pushed. Solana's obviously done tremendously well. We think we can go even further along that domain, especially if you pair Solana level performance with the EVM. So that's kind of the last sector that we're pretty focused on at the moment.
Fantastic. So thank you for taking us through those. The first of them, I don't think we should talk too much more about because the audience has heard an awful lot about stablecoins payments and including we had Greg Kidd earlier on talking about USBC and the arrival of bank tokens as well. So I don't think we should spend too much time on that, but definitely want to dip into all three of the others. In terms of financial infrastructure, you guys are ex-Fidelity, and I know that you stay very, very close with the big institutions. Sometimes, Nick, you are a thorn in their side, but nonetheless, I'm pretty sure that how the institutional players on the East Coast are thinking about this technology. So could you just give us a flavor? What do they need and what is the industry building for them?
Yeah, I think it's so important to stay on top of what the product roadmaps are on the inside of some of these big institutions because they truly unlock large capital participation in the industry in a way that is kind of hard to rival. So some of the trends we see, one is just basic buy-sell functionality for things like Bitcoin, Ethereum, and Solana. That might sound easy, but there's a lot of decisions that go into that. The first thing is how will you custody the asset? And so we're seeing this really interesting market dynamic now where Staff Accounting Bulletin 121 prevented all of the banks from custodying crypto. And now that it's repealed, they can actually be in that market. So we're seeing a build versus buy versus partner conversation happen at a lot of these big financial institutions. I think a number of them will use sub-custodians. For example, Anchorage is probably going to compete pretty aggressively in that market. think that there's also a world where a lot of these institutions will try to build something with an MPC custodian, with a kind of a software profile. And so there's going to be some interesting competitive dynamics in that MPC custody space. Another one is just stable coins. Obviously, we won't go into too much detail, but if you're a bank and you're looking at just cash movement, a lot of the infrastructure to engage with stable coins doesn't really exist at large scale yet. So think about things like compliance software that can actually keep up with the pace of the transactions on the stablecoin network. I think that we're seeing some real challenges there where these big financial institutions are probably not seeing things that are as performant as what they would be used to in the legacy space. So that's a space that we're quite interested in as well. Nick, I don't know if you'd add anything to that.
Yeah, that's well said. One thing that I think will become more relevant as you have more regulated financial institutions start to make more transactions on public blockchains would be the introduction of messaging layers that can accompany settlement. And obviously in traditional payments, you have the settlement and the messaging are distinct functions like Swift and Fedwire. With crypto, you have settlement, but oftentimes no messaging to carry, any kind of information pertaining to the transaction. Some of the compliance vendors are trying to build this, but one thing we're looking at would be what would it look like to have a Swift for blockchains for stablecoin transactions? So there's still a lot of infrastructure that needs to be built in our view.
Yeah, and maybe the last thing I would add there is just the trading market structure here we think is going to change pretty aggressively over the next few months and years. And that's everything down from exchanges to ATS venues. We think the dark pools are going to emerge here for cryptocurrencies. So a lot of the infrastructure that exists in legacy equity land or debt instruments even, we will see attempts to do that in the crypto space. And it's very unlikely to us that the quote unquote exchanges of today will be kind of the institutional caliber exchanges of tomorrow. They look a lot more like brokerage businesses than they do seat licensed exchanges. So we see a lot of innovation in that category coming as well.
Yeah, thanks. That's very interesting. Topher, who I'm not going to ask to rejoin us right now, is our head of digital asset research, and he creates that adoption report twice a year. And it's pretty interesting how it's lighting up green with a lot of the world's biggest financial institutions now beginning to roll out prototypes and so on. I got a call earlier on this week from one of the top 15 banks in America. I won't name them, but they wanted our point of view on a strategic investment they're planning to make in a custodian, a digital custodian. This bank today will not bank a native crypto company. And they explain why not, but they still have not agreed to bank companies. And I don't necessarily, Nick, want to unleash all your expertise on the choke point 2.0 conversation. But what I do want to talk about is I couldn't understand their strategy. How could you be a digital asset custodian if you wouldn't allow the assets to move and flow through your customer accounts to the places they want to send them? It feels like that. I don't understand how you could be a digital asset custodian and not enable payment rails that would go back and forth into our industry and our crypto and DeFi spaces. So I'm curious on that. Do you think, can you imagine a digital asset only custodian that wouldn't do anything else? Is that feasible role for a bank?
Yeah, I mean, I think what we've seen in prior years is people think banks don't want to do crypto. That's certainly not true. They did try. And in 2022 and 23, and US banks got a lot of letters from the FDIC asking them to stop building crypto products. A lot of that pertained to third-party arrangements where they would allow their clients to buy and sell Bitcoin and crypto assets. Now with SAB 121 going away, banks can do crypto custody. The last part is taking on crypto firms as clients and opening up their depository base to crypto firms. And there's still a bit of a hangover, frankly, from choke point 2.0. we have seen some positive developments like the OCC coming out with an interpretive letter recently saying banks are allowed to do crypto, but the pressure isn't fully gone. Really, we would want to see something from the Fed reversing their prior stance. They had this letter in 2023 basically discouraging banks from serving crypto. That hasn't changed yet. Michael Barr did step down as VP of supervision at the Fed, and Mickey Bowman will replace him. So I'm optimistic that that will change, but I am sympathetic actually to banks that are still leery about serving crypto depositors because there hasn't been a full change of course from the regulators just yet. I do think it'll change, but I mean, as a bank, you really don't want to offend your primary regulator, that's for sure.
Yeah. Yes, well said. So we've talked a little bit about that second investment theme, institutional infrastructure in TradFi and in the finance industry. Moving on to your third investment theme, would you just double click a little bit more and tell us about why you've chosen that one and what are the types of opportunities you're seeing?
One of the biggest risks to our industry is if we continue to have this dynamic where hacks are pervasive and nation states are at the forefront of that. We think there are some very basic categories here that would have to be in place for any major financial institution to take a very big step forward in the crypto space. We're talking about the auditing of smart contracts. We're talking about the monitoring of transactions coming in and out. We're talking about pen testing on employees to make sure that they're not clicking on suspicious links, things of that nature. We're also very excited about this emerging category of real-time monitoring. So if you imagine a world where you're going to have regulated front ends that connect customers to DeFi pools, for instance, you're going to need to have a very near real-time look on what's going on in those pools. Has a nefarious actor entered that pool? Is there some sort of a suspicious transaction that's happening that could trigger an AML issue for the bank or the broker dealer? So we're going to have to get a lot better as an industry in looking at things like that. We're also interested in just very basic things like backing up of sensitive material. This is a huge category in the Web 2.0 space. And we think for things like private keys, backing up your Fireblocks instance, that's a good example. So there's just a lot of things that don't exist yet, I guess is the point. And we need to have higher caliber entrepreneurs entering that category, really just to keep the industry safe.
Yeah, and I'll just add to that, when we have a hack in crypto, it is reactive currently, the recourse, right? So, victims of a hack will go to the stablecoin issuers and ask them to freeze funds that are in stablecoin, or they will flag the funds as fraudulent and trace them to other exchanges, things like that. I'm interested in entrepreneurs that are going into proactive hack disruption as opposed to purely the reactive method. So if this is kind of a new category that's just emerging now, like if transactions are happening on an L2, maybe there's some amount of latency before those transactions are settled to the L1, thus giving you a window of time to interdict a transaction, stop any kind of fraudulent transactions. So I think there's a lot more that could be done in terms of actually preventing hacks in the first place, defining what kinds of transactions are licit or illicit, and actually stopping them before they occur. That's something we're looking into as well.
Yeah, well said, Nick. We actually had one of the audience ask a question earlier on about since, a credit card transaction, you have recourse and a stablecoin transaction right now you don't. How can we be arguing that blockchain is safer? And we're not necessarily arguing that it's where it needs to be. And I think you make the point very clear. We need to continue to level up how we use things like stable coins to ensure that that those types of interceptions of bad actors and bad transfers can occur. We had Greg Kidd speak earlier on about USBC, which is his new bank-backed token strategy, and implicitly there the banks issue the tokens and the banks can intercept the tokens, and they also ride on this underneath the fractional reserve system and the insurance of the banking system. So it was pretty interesting to hear him speak to that. The other thing that we're hearing a lot about, at least we're hearing a lot about, and I'm curious if you are in this third category, is the use of AI by bad people to do bad things. And, the notion that we're about to see everything we do undermined by a wave of AI-driven, cyber attacks, cyber security issues, phishes, scams, breaches. And I've heard blockchain engineers say the only way to combat AI fraud will be with AI security. That human beings will not be able to cope with the volumes. And I'm curious, is that in your third bucket?
Yeah, without a doubt, without a doubt. I guess the question is ultimately, does the emergence of AI tilt the balance of power in favor of the attackers or the defenders? And for sure, our portcos in the cyberspace are employing AI for automated detection of bugs and smart contracts, for code review, for automatically flagging suspicious transactions. But on the same side, attackers are also using AI to scrutinize every aspect of a smart contract, and for more sophisticated phishing, there's new genres of extremely sophisticated AI-driven scams for impersonation, for instance. So I think the jury's out on whether AI makes it harder to defend, but certainly now both sides are employing it.
Yeah. By the way, that was Jonathan over at the CEO of Chainalysis that made that comment at the Cantor Fitzgerald event last week in New York. That his view is that Chainalysis needs to become a leader in AI defense in order to be able to combat AI fraud. So it was interesting for me to hear that, and I think he just made a small acquisition in the space to begin to level up Chainalysis. We're investors in Chainalysis for full disclosure. The fourth investment theme. You talked a little bit about essentially the next wave of foundational technology. Can you give us a bit more flavor to that? What are some of the things you're backing right now?
It's funny, we were actually over at our old stomping grounds at Fidelity last night with a few people, and we were talking about the first time that we got into the industry in earnest, and that was in 2015, right around the time of the MIT Bitcoin Expo. So we went back on YouTube and started to watch some of the videos just to see how people were talking about Bitcoin and what's next. And I would say there was widespread dismissal of things like Ethereum and some of these altcoins that started to pop up. And I think if there's one thing that we've learned over the 10 years that we've been doing this is that there will be new chains that emerge. Look, if Ethereum was built today, it would be built a lot differently. And we think that would probably look a lot like something like a monad, which is using the EVM to achieve parallel execution, but also have a backwards compatibility with Ethereum. So that's a project that we're quite excited about. I think that the design space of what you can actually do on DeFi with the throughput of something like a monad will be really, really interesting. I think you'll see central limit order books come on chain, see net new use cases in that DeFi category. So we've been quite active there. Also looking at some of the layer twos that are emerging on top of Bitcoin. I can let Nick go a little bit deeper on this, but there's been some actual inventions at the technical side that enable some of these things that we used to talk about side chains, and that was a big Blockstream effort back in 2015 that never quite got there. But that idea might well be possible here in the next year or two on the Bitcoin L2, maybe with a different implementation, but same general sense.
Yeah, I'll just add to that briefly. So, obviously, the notion of a roll-up, that those became popular in Ethereum, and in Ethereum land, they were really developed significantly. Even though the first folks to theorize rollups were actually Bitcoin developers in 2013, and I think there used to be this culture in Bitcoin of adopting the best technology from altcoins, and then Bitcoin kind of went away from that. The good news is in the last couple of years, there are some key breakthroughs, specifically BitVM, which allows for more complex transactions on Bitcoin using Bitcoin script without requiring any kind of change to Bitcoin, no soft fork, no hard fork. We believe this year will be the first year in which we see kind of true quote unquote Bitcoin rollups built, which will unleash the Bitcoin collateral base, which is well over $1 trillion, to be utilized for the first time in a trustless manner in DeFi. So an ecosystem such as exists on Ethereum, but utilizing Bitcoin natively. We think this is one of the biggest themes in the market. We think Bitcoin, stands alone in terms of its credibility and its track record, and it's about time that we did build some programmability into Bitcoin. And so that's one of the things that's most exciting to us is the emergence of true rollups on Bitcoin.
Thank you. Okay, so we've talked quite a bit about the investment themes. You were very, very helpful in sort of explaining what they are for you and why you're focused on them. The next question I sort of want to ask is about how do you get the best entrepreneurs to work with you? So Alison has said a couple of times today in her components that one of the truisms of venture capital is you've got to be investing with the best investors. And obviously that's our strategy. That's why we're LPs in your funds. But it raises the question, how are you the best investors in the space along with others? What is it, your edge? What is it that gets you the best entrepreneurs and the best projects wanting to take your capital? Because at the same time, there's no shortage of capital, and most funds, even in our space, most funds do not have the returns that you have. So where does the edge come from at Castle Island, and how do you think about that?
There's a few ways to tackle that. Maybe I'll start and pass it off to Nick. But one is it really helps to have a very deep opinion on a sector or a market trend. And for us, a lot of that has been in financial services. So that's getting really, really close to the bigger companies that are actually building things, that will be shipping products, that will be having the need to go out to smaller companies, like companies that we invest in, and actually become customers of their services. And so getting those close connections and actually being able to introduce future portfolio companies into that slipstream. So trying to make sure that we can be making introductions. Some of these portfolio companies, we're making the first 10, 15 customer introductions, mostly in the financial services space. So we've found that has tremendous advantages as the years go by, because then founders start to reference each other, and founders are smart. They're going to call around and ask what it's like to work with Castle Island. And we want them to say, look, these guys introduced me to my first 5 customers in the institutional channel. They had a really good view on the market structure. So that's one. There's another area where we think thinking out loud and being public with your opinions has been really beneficial. I give Nick a lot of credit for a lot of the work we do in that space. So maybe I'll let you take that one, Nick.
Yeah, part of it is demonstrating expertise in the sectors in which founders are building, and having a strong view on the sector. So, for instance, in the stablecoin sector, this is something we've done, really trying to push the envelope in terms of our research and thinking there, and resources we're bringing to bear, so that when a founder comes to you, they know that the partnership will already be sophisticated about the sector in which they're building. Another thing is fund construction. This doesn't get discussed a lot, but putting together the fund such that you are able to allocate the time and attention to the founders that they deserve, and such that the GPs can take the board seats and actually deliver on what they say they're going to do when they make the investment. When we're reverse pitching the founder, we want these founders to reference with our existing portfolio companies so that they can tell them, yeah, these guys are allocating meaningful resources, and they're actually adding value, so to speak, in the ways that they claim to, whether that's helping with executive search, capital introduction, general strategic decision making, et cetera. So having that, like leading a bunch of rounds and having the fund set up such that you're not absolutely swamped with dozens and dozens of portfolio companies, such that the GPs actually do have the time and attention to devote these portcos. We find that's really helpful.
Got it. So if that's your edge, where are you finding the best developers and projects right now. So you've talked about the investment themes. I mean, I've held for a long time a little bit of a view after 40 years in Silicon Valley that software engineers, excuse the analogy, but software engineers are a bit like musicians. You know, they start early, they master their instrument, they can be amazing at it. But later in life, if you ask them to pick up a completely different instrument, they struggle. And, you know, to ask a violinist to become a drummer would actually be a bit of a stretch. And I've seen that in generations of software. So, you know, I remember doing a project for HP. They had thousands of engineers who were very, very good with Fortran and COBOL, but they didn't really understand mobile software platforms and technologies. And it was an issue. It was a real issue. And they couldn't be repotted. And so where are the world's best blockchain and AI engineers to be found? And what's their typical profile? And do they just come to you or do you seek them out? Tell us a bit about that matchmaking process.
I would say by far the best way to meet great founders is through other great founders, is what we've found. And so founders in our portfolio often send us the very best possible deals. And, you know, there's 2 or 3 that come to mind right now that every time they send us something, we take it very seriously and we're likely to extend a term sheet. It's at that level where they know what we're looking for. They understand our, you know, lens on the market, and they're just well networked. And so over the years, that has been increasingly the focus. When you're starting a venture fund, you don't necessarily have that advantage. And so you're out there pounding the pavement, you're going to technical conferences, you're hanging out at MIT and seeing who the talent is that's building in the crypto space, you're going to meetups. And, you know, you still do all of that now, but now you just have the positive flywheel of the founder referrals. And so, you know, that's one. And then the other thing I'd say is that we do see a little bit of a, it's an interesting market because in financial services, it's more than just technical talent. Oftentimes it's a mindset towards regulatory that is necessary to succeed in some of these businesses. So you're looking for people that maybe have traveled the idea maze on someone else's dime and worked at a larger company maybe, or worked at a startup that had to go through licensing challenges or something like that. And that's another place that we've had a lot of success, is just founders that have the technical acumen, but also have the regulatory sense of how to get the business off the ground. Nick, I don't know if you'd add anything there.
Yeah, I mean, crypto is interesting because talent is globally distributed, so there isn't a specific geographic target zone that we necessarily focus on, although New York seems to be the nexus of at least US blockchain development at the moment. Um, but one interesting thing we've noticed recently is, you know, high quality startups coming out of exited, you know, Web 2 or like fintech firms that aren't necessarily your traditional crypto natives, so to speak. They may have been crypto skeptics in the past, and they might have seen the metrics around stablecoins, you know, the demonstrated adoption there, and they decided, well, I can build a fintech business on crypto rails vastly more efficiently in a more capital efficient way, natively global. And then they start to build something that they've successfully built in the past on correspondent banking rails, now on top of stablecoins, for instance. So we're actually seeing quite a lot of that at the moment, as opposed to, you know, just these long tenured crypto natives. So it's an interesting development we noticed recently.
Yeah, it's a great one. We had Chris from Yellow Card earlier on, and that would be sort of a purpose-built business built on top of stablecoin rails. We actually saw a Revolut team recently launch something in Europe, very same. They treasury management at Revolut now created treasury management for the world. So I hear you on all of that. We're coming to the end, and already you've given us a lot of insight and a lot to think about. We often get hit by 2 questions over here, and I want to ask both of the questions. I'll ask you them at the same time. One of them is it too late? Have I missed all of this? Is there going to be new substantial innovation still to be had that I could back if I was a family office trying to make some investment in the space. And then the second question that I want to ask you is, we also get asked the question, well, why don't I just invest in Bitcoin? You know, Bitcoin's returns have been so exceptional. Why would I do illiquid early stage venture? And so if you don't mind, I'd like to sort of wrap up with those two questions.
Yeah, and being too late, it's that is something we have been saying for the past 10 years, I think. We used to say that in 2017 at Fidelity, are we too late? But and you look around right now, how many banks and broker dealers are active in this market? How many people can even buy the ETF on their bank private wealth platform? I see that Matt Hogan's up after us, and I think he has some great perspectives on are we too late? And I think he's quite eloquent in it. But in my mind, it feels quite early. You also just have to look at think about the companies that have not gotten started in the US because of the SEC over the past few years, and just the ambiguity around whether or not some of these things are tokens or securities versus commodities. How many more file coins would we have if it didn't cost $100 million in legal fees to actually fight that battle? So I think we're incredibly early as an industry here, and Bitcoin is still a baby. I mean, compare it to IBM, right? We're 15 years into the Bitcoin journey. It's changing a lot. 10 years ago, no one even really understood what Bitcoin was. They were talking about it as a credit card killer. Now we see it as digital gold. So strikes me as incredibly early. On your question around buying Bitcoin, I think it's a yes and. You know, it's venture capital is a great asset class if you can get into the right managers, and you know, gold is a pretty interesting asset class too. And I think Bitcoin is closer to digital gold than it is to venture capital.
Yes, thank you.
Yeah, the law of large numbers has to kick in eventually. I mean, early stage VC, you're investing at maybe $10 million free money for a seed. We hope that these companies will be acquired or go public eventually. That's a very different return, liquidity, and duration profile from Bitcoin, which is already very established, mature, worth multiple trillions. That's not to say we're negative on Bitcoin. We love the asset, of course, and continue to think it'll one day eclipse gold. Um, but just different asset classes to be considered separately, I think. But of course, we think there's enormous upside at the early stage.
Fantastic. Well, so Matt and Nick, as I said at the outset, we couldn't be happier as LPs. You do all the heavy lifting alongside the entrepreneurs, and we get to participate, and we're very excited by all of that. So thank you again for joining us this year. Hopefully we'll have you back next year if you'll come, and really appreciate the relationship. Thank you very much.
We do too. Thank you, Matthew. Enjoyed it.
Thank you.
Bye-bye.